Hey everyone, a headline that caught my attention, the first real bounce of the sell-off. Bitcoin had been falling for weeks, touching multi-year lows. Today, for the first time, it actually bounced meaningfully. And behind this bounce, two major events unfolded on back-to-back days. Let's break it all down together. The first event happened yesterday in Sintra, Portugal, at the European Central Bank's annual forum. Four of the most powerful central bankers in the world shared the same stage. Fed Chair Kevin Warsh, ECB President Christine Lagarde, Bank of England Governor Andrew Bailey, and Bank of Canada Governor Tiff Macklem. This was Warsh's first major international appearance since taking over as Fed Chair, and the market was watching his every word. Warsh said something the market had not heard from him before. Since I took office, price pressures have eased. When asked whether the AI spending boom was inflationary, he declined to make a judgment, a significant softening from his June FOMC tone, where he triggered weeks of ETF outflows with an aggressively hawkish dot plot. The market read this as dovish. Bitcoin began climbing back from its cycle low near $58,000. Gold surged 3.7%. Silver jumped 6%. But the move wasn't fully confirmed because the jobs report was still coming. Then today, the second event landed. The June Nonfarm Payrolls report was released. The market expected 110,000 new jobs. The actual number, 52,000, less than half of the forecast. May's figure was also revised down from 172,000 to 129,000. The unemployment rate ticked down to 4.2%, but that's actually misleading. The labor force participation rate fell at the same time, from 61.8% to 61.5%. That means people are dropping out of the workforce rather than finding jobs. The headline looks better than the reality underneath. When the data hit, the two signals combined into one clear market message: the Fed will not hike in July. The reaction was immediate. September rate hike odds collapsed from 60 to 85% just days ago, down to below 50% in a single session. That's a historic single-day move. The 10-year Treasury yield fell 4 basis points to 4.46%. The 2-year yield dropped 5 basis points. The dollar index slipped to 101.12. One analyst at CoinDesk put it this way: Bitcoin, often viewed as the market's purest barometer for risk and liquidity, had already priced in the jobs data ahead of the release. It is well positioned for a constructive second half of the year, and $100,000 is increasingly within reach by year-end if current trends persist. But let's be honest about what this is and what it isn't. The bond market is not convinced. Treasury yields remain elevated at 4.46%. Bond investors are still pricing in higher for longer rates, regardless of today's soft print. And technically speaking, Bitcoin's first critical resistance sits at $64,270. The Fibonacci level lost during the June breakdown that now acts as overhead resistance. Until that level is reclaimed with conviction, today's move is a technical bounce, not a confirmed reversal. If $64,270 breaks, the next zone opens towards $73,000 to $83,000. If it fails, the risk of another leg lower remains very real. 2 days, 2 events. Warsh softened his tone. Jobs came in weak. Bitcoin posted its first real bounce in weeks. Whether this becomes something more will be answered at $64,270. July 4th is a US market holiday tomorrow. July 7th, SpaceX enters the Nasdaq 100. July 29th, Warsh has his next FOMC meeting. The story continues. I'm Meat. I don't predict, I read. This is Red or Green.